You are listening to ChartingWealth.com for Thursday, the 14th of April, 2016. I am traveling and counting on a good internet connection. I hope that it will function for me the whole time we're doing this podcast for you. Let's talk about what went on today. We talked about how long the market was getting in the tooth, but also that we were still in a confirmed up move, even though the short chart was down. What did we talk about? We talked about how the big chart is what controls. And what did we see occur over the course of the 2-day candle that we're looking at from the 13th? We saw the market, total market, as according to IYY, which is the iShares Dow Jones U.S. Total Market Index Fund, and it's an exchange-traded fund. It was up 1.08% for the day. We have a large green up candle. It is crossing back up over the last 2-day trend line that we drew. We're going to have to draw a new trend line now. And again, we were positive on the charts when it came to the 2-day chart. It was still in an uptrend. And as I'm speaking, those of you who are actually watching via video, which you can do every day, you can also listen on iTunes, and we appreciate that. What do we see going on? Well, we're above the 2-day trend line again. We saw the MACD and the signal line that were converging have now diverged. The derivative oscillators gone up a little bit. It was getting ready. It looked like the crossover going down, but folks, that is why we don't call a down move until a down move actually occurs. This is the reason we trend follow. Those of you who listen to us religiously, as I hope all of you do, because that's the only way you're going to really learn how to do this, the one thing you've got to pay attention to is the large chart. Wait for the small chart to roll over in the opposite direction as it did back on the 5th of April. And then when it crosses back over, and we talked about, particularly on the Qs that we'll get to in a minute, we talked about waiting for that crossover going back up, which is what it did this morning. I have received the text messages and emails from those of you who jumped in on that up move and saw your position increase markedly. Actually, the market opened at around, what was that, around 102.30 or so, closed at 103.59. Now that's in IYY. But we're going to talk more about the Qs because that was the one I really told you to pay attention to on yesterday's podcast. What did we see happen? Well, we saw the crossover occur in the morning and the market continued to shoot up in the afternoon. So we've redrawn our 2-day trend line, which we are now above, and we'll continue to watch what happens with the market. Does any of this make sense as to what's going on around the world? We don't care what the talking heads tell us. We pay attention to what the charts are doing. It does not confuse us. The noise we hear, we don't let that confuse us. Remember, our rule is we look at what happened the last week on Sunday or Monday morning. We talk about what's going on for the new week at the same time, Sunday or Monday morning. That's how we pay attention to what happened in the past week, looking at the events that move the market, and we look at the things we know are on the calendar that might move the market the following week. And again, we never know what world tragedies, what can happen. That's why you've got to be nimble. You've got to pay attention to the market. You have to be able to read these indicators. Okay, that's where we are on the total market. Now we're going to drop back again to our 2-day chart. We're going to look at the S&P 500 as depicted by SPY, which is the Spider's U.S. S&P 500, the Standard & Poor's 500 Trust Series Exchange Traded Fund. We're going to have to redraw our trend line on that one too. This is what I love so much. Is this just not the best charting software on the planet? Our friends at freestockcharts.com, incredible. I just redrew a trend line, so easy to do. What do we see happen in the S&P 500? It was up 1.01% for the day. Continues to track. Darn if it's not close, though. And I do encourage all of you who have the Stock Traders Almanac, please go read that for the month of April and see what happens. Typically in mid-April, when the market goes down many times, depending on whether you're in the S&P 500, the Qs, or IYY, I'll let you go read it. It's copyrighted material. It is great stuff. You need the Stock Trader's Almanac for 2016. You need it every year. I buy it every year. I'm always bragging on Jeff Hirsch online. He and his father, Yale, their work is priceless. And so pay attention to what the Stock Trader's Almanac tells you about what happens in mid-month. Even though we see things booming up right now, look how close we are. Look how low. And again, the market can continue to go up, but we love paying attention to history also. So what happened with the S&P 500? Like I said, up markedly during the day, over 1%. If we look at the 4-hour chart, we had that crossover in the morning, and we had it moving up. The market opened around 105.20, closed around up $2.70 or $2.50 or so. Again, I'm using the Heikin Ashi charts, those kind of candlesticks, so it's a little different than what we typically look at if you're just looking at candlesticks. We're above the 2-day trend line. We have a crossover going up on the 4-hour chart. There was a jump-in point in the morning. I know that some of you jumped in on that on virtual trades, and we're very happy with yourselves. Let's continue to see, because we're out of breath whenever the candles rise above and close above the Bollinger Bands, which are our volatility bands, which had been tightening up. Now they're expanding. You can't stay outside those Bollinger Bands. You got to come back in. There's no air out there is the way I originally learned it. So we'll continue to pay attention to what's going on. Now let's look at the 2-day chart and the Qs. The Qs is the one I really talked about yesterday. It had stayed above the 2-day trend line, even with the down movement. It was getting close, but not nearly as close as the S&P 500 and IYY, nor was the derivative oscillator as low as it was on those other two indexes. And what happened? Well, the Qs boomed up 1.28% for the day. If we look at the 4-hour chart, what do we see? We saw that crossover, and it's crossed over strong. It was in the negative, boomed up in the morning, crossed over in the afternoon, and continued to move up. I know that several of you found good entry points and jumped in on the Qs. So again, continue to pay close attention, because we are awfully darn close when it comes to that 2-day chart with a crossover going down. And historically, if you pay attention to what happens in mid-April, please watch out for it. Okay, now let's lastly take a look at gold. Gold, as the market zoomed up, gold was down 1.07%. Gold is still in a confirmed down move on the 2-day chart. We talked about that. It's been losing that downward momentum as a derivative oscillator. That red candle has been reducing on it. We saw the MACD and the signal line getting closer on the last candle, but then they diverged again with the down move on the new candle. Now, if we look intraday, what do we see on the 4-hour chart? 4-hour charts lost a lot of that energy, 2 big down moves in the morning and the afternoon on the 13th, and consequently, derivative oscillator lost a good bit of upward momentum, but it's not crossed over going down yet. You're going to have to wait longer before gold gives you that trigger to jump into a down move. So pay attention to what the charts are telling you, not the media noise. Again, gold in a confirmed long-term down move, but it is still in a confirmed up move on the 4-hour chart. It has not yet moved over, making that a confirmed entry point. That is where we are as we close out the day on Wednesday and look at the fresh day of Thursday as the markets open. Continue to pay attention. Again, I'll refer you to the Stock Trader's Almanac. It is a wonderful, wonderful, wonderful resource that I have used for years, continue to swear by, and will continue to use. Please make sure to get yourself a copy of that. Even though you've lost a few months, it's still worth having. I absolutely love it. Thank you so much. If you've not signed up for our newsletter, you need to do so. How do you do that? Well, you go to chartingwealth.com and you just put in your first name and your email address. We will send you the charts every day. There'll be videos. It's only a few minutes. It's the best time you can spend learning what the markets are all about, because no matter if you're a value investor or if you're a charting kind of person, regardless, who wants to buy higher than you have to? Who wants to sell early who wants to sell early before it actually tops out? The markets give you clues. They're called charts. They're like a roadmap. So please make sure you invest the time and energy to learn how this works. It's fun. It's not that complicated. It requires some time. One of my ski instructors years ago, when I was trying to learn to parallel ski, said, you got to have some more mileage. Well, I've learned that. You got to have some mileage. You got to put in the time. But when you do, it's going to pay incredible dividends. Unlike a stock dividend that only pays every quarter, this can pay you every day or pay out a whole lot more than just one stock dividend every quarter. Thank you so much for listening. We love to hear from you. Follow us Facebook, Twitter, Instagram, YouTube, you name it. We are there. We like to hear from you at chartingwealth.com.